Okay, so firstly, you happy for me to record this?
Yeah, good, good, good.
Yeah, fantastic. So basically, I just sort of want to run through your Economist note, and I have a few sort of follow-up questions on that.
Yeah, good, good, yeah.
Where I sort of wanted to start with, right at the top, you sort of said you're expecting there's an 80% chance that it will last for 2 to 3 weeks,
Yeah,
2 3 weeks longer.
yeah,
So
yeah.
I'm just kind of wondering how you came to
I
that sort
just
of
pulled it out of the
conclusion.
air. I just pulled that out of the air. And the
Okay.
reason why
Yeah.
I'm okay, so first of all, I'm not stupid. I understand there's all kinds of poly market type, stuff going on,
Sure.
but I'm just looking at it from a too big to happen point of view. I don't think there's been a full understanding or recognition of how much, in fact, whatever I wrote in the report is even I have to tone down a little bit for, because we published the report and stuff. If this happens, that the supply of the fuel, of LNG, of fertilizer, of helium, if all that gets cut off to Asia, this will be worse than COVID. This will be like COVID plus the GFC. I mean, it will be absolutely horrendous. And that's the reason that I think it cannot happen. So I just made that number out of the air.
Okay, cool, cool. Well, I'm just wondering then, like, does that impact sort of your investment decisions, or
Of course, we're raising cash.
yeah, but I'm like, you're saying it's going to be 2 to 3 weeks. Are you making decisions based on that
Yeah,
that sort of time
yeah,
frame,
absolutely,
or
sure, sure, yeah, yeah, yeah.
okay, cool.
Because, by
Um,
the way, once once things are settled and things start flowing again, there's going to be an enormous surge in all stock markets, not just Vietnam's. There's going to be a huge, rebound rally. And the one way to see that is that look at how resilient stock markets, certainly in the U.S. We look at what's called the VIX, which is like the volatility index. The VIX has barely gone above 30 the whole time. So the stock markets have been really resilient, and we think that once it's clear that things are starting to, approach something getting back to normal, there'll be a huge surge in markets everywhere.
sure. I mean, I guess like 2 to 3 weeks is quite short, is what I'm thinking, and I'm going, if this drags on
Yeah.
for months, the impacts could be huge.
Well, we should be a little bit careful and clear. It's a good point you're making, and you're not the first one to say that. So I'm like, will the war keep happening? Will there still be all kind of, yeah, that's likely. But the only thing that matters for the economy is whether the oil and other things will flow through the Strait of Hormuz. That's it. Nothing else matters. So whether there'll still be some, missiles going back and forth or whatever, yeah, that's probably a 1 year or 2 year story, something like that. But as long as the flow of energy and other products is happening, and I think the resolution, unfortunately, from a U.S. point of view, this is going to be, you're probably a little bit too young to remember all this stuff, but when I was a kid, we used to talk about the Suez Canal crisis, which was like in the 50s. And the Suez Canal crisis is sort of the end of the UK empire. I mean, it was a really dramatic. So I do think that the U.S. will be forced to capitulate. Well, the Iran is obviously going to control that area. They're going to charge a $2 million toll, for stuff to go through. And later, this will be a point that people recognize, like, oh, this was really terrible for the American empire, But that's not what we're talking about in any of this. I just mean that, it has to unclog very quickly, or it's going to be like one of the worst economic events in my lifetime, basically.
Sure, cool. Okay, cool. So now that we sort of established that, I want to go to the numbers you sort of put forward. You think GDP
Yeah,
growth is going to take a 1.5% hit,
yeah,
based on my reading of it is based on it being 2 to 3 weeks longer before things
yeah.
start to open back
Basically,
up.
ending kind of now type thing. And the point there is that even if it ends kind of right away, it's still going to have a pretty dramatic impact, that's going to last for basically the rest of the year.
So I'm curious, have you forecast beyond what happens if it goes more than two
I'm
to
sorry,
three
what?
weeks? Have you forecast beyond what you think will, like, sorry, if it goes beyond
Yeah,
2 to 3
okay.
weeks, have you
That's a great
forecast what you think will
question.
happen?
Okay, that's a great question, and that's actually relatively easy to do. You would be surprised that that's actually not that hard. Coming up with the
Sure.
80% number is kind of just out of the air, but
Sure.
coming up with that stuff, actually, there's about so 20 million barrels flows through the Hormuz, right? That you
Sure.
can probably divert maybe 10-ish of that. So the Saudi Arabia's got this pipeline that goes across the country, so you can have 5 million coming via the Red Sea, et cetera, et cetera. But, and so that stuff you can just flip on in one day. But there's been about 10 million barrels of oil that's been in that field, in the E&P field they call shut in. So shut in means you pour concrete and you plug up the well. And
Sure.
you cannot just turn back on. So you have to, once you shut in a well, you have to very gradually get it back online. So that's one thing. And then the other thing is that some people who are much more knowledgeable than us, and you know, there's this guy Jeff Curry. I've been following him for years. Several people talk about this idea that there will be, and there's a very clear pattern that when you have one of these big disruptions, people don't. It's not just that they want to restock, like because they just had this trauma. The global oil demand will be probably about 3 million barrels per day higher than it was. You know, just because people are like so freaked out, and you know, not only do I want to restock, but I want like even more. You know, like for example, Vietnam, the oil reserves is very low here, so that will certainly be one of the first priorities, and that's in a played out scenario all across the world. So you do some calculation and can figure out that oil is not going to come back to a equilibrium, supply and demand equilibrium, at least for 5 or 6 months. And so then you can kind of map out like, okay, realistically, and we did it in the report. I can't remember the exact numbers, but it's it's like 100 until this thing kind of opens up, and then you know, high 70s after that. Do some back of the envelope calculation, and you find out that the average this year will probably be 85 or 87, something like that. Something I did not get into in the report, because just otherwise it's going to get too long, is the idea that if someone had told you in advance, like here's all the things that's going to happen in the oil market, someone told you, you know, kind of three months in advance, like the strait's going to be blocked, and you know, Trump's going to be acting like a retard, and you know, this Europe and this thing that. If someone told you all those things in advance, and they say, well, what would the oil price be? Every single person that I know that's knowledgeable comes to the same conclusion: should be 200. So the fact that all that stuff happened and it's still like in the low hundreds, what that means is that after things start flowing and things kind of start going back to normal, the price of energy is going to collapse, like really collapse. And so what we're setting up for is for 2027 to be the price of energy is going to really collapse. It's going to be a huge boom in the world economy. And now with all this tectonic plate stuff shifting around, Vietnam's going to be like in a great position to, you know, take advantage of all that. So it'll be very difficult this year, but then after, you know, and these are all kind of relatively easy to calculate out and figure out, you know.
Sure. So break this down for me. Vietnam's position, you said, is going to be really this is going to be in a really good position.
Because
in what sort of ways?
We're friends with everyone, basically, you know. Yeah.
Yeah, but like any particular sector, or like what?
Well, I'll come back to that in a second, but just to make sure I really nail this point home, let's think about the countries that benefited the most from World War II. So obviously the US, because we won, but Switzerland, you know, this was a big, you know, they were kind of the in between, right? So what you will see here, and you've already, you know, been seeing it for a couple of years now, is more and more intense FDI coming here, because you can feel safe that if you manufacture products here, and that's a, you know, a continuation of an existing trend, more manufacturing of more high-tech products, the build out of local supply chains for all those FDI companies. And then, so that's kind of the primary driver. And what happens in all of these emerging market countries is very predictable, is as the emerging middle class start to prosper, then there's all kind of predictable things that they want. They want better healthcare, they want travel, they want better housing, blah, blah, blah. So when you say sectors, it's like first, it's more of the same, more intense on manufacturing. Right now, about almost 40% of the population of the workforce, is still employed in agriculture. That's absurdly too high a number, So you'll see that number shrinking over time, people moving from the farm to the factory, and then just more and more spillover to, drive the emerging middle class. Yeah.
Sure. So more of the same of what we had before this sort of happened.
Yeah.
Right. Okay, cool. I also wanted to touch on inflation. Similar thing. You said 5 to 5.5%.
Yeah.
I'm wondering how you think this will be managed, or how you think it should be managed.
Well, they already started, and they're very clever. We have to give them credit because the GDP, you probably know that the stats came out over the weekend.
Yeah,
and you can very easily calculate that had they not, suppressed the price of petrol going higher, it would have been like 5.5% or so CPI. But because of that, it was I think the print was 4.7 or something like that. So when they subsidize petrol, they're kind of achieving two things. One is they're stopping inflation from, getting too high, but also that's the best way to, they have to respond to everything that's happening with stimulus. And, this is the most obvious place that they should be spending money. I mentioned the report in the past, they never really spend much more than 0.5% of GDP on petrol subsidy compared to 3% or something in Indonesia. So this is the most obvious thing that they should be doing to help support the economy. But they'll also have to, at some point, do some measures directly to help households, maybe some sort of a mortgage interest rate subsidy or something like that. They'll have to do much more aggressive measures to support the economy than they have in the past.
Sure, but I still feel these measures are still going to create inflation, right? Particularly household subsidies. You're going to pump more cash into the economy. You're going to have higher inflation.
Yeah.
I guess what I'm wondering about is things like forex reserves and things like that, which, as I understand, it's only about 2 months worth of imports at the moment.
Yeah.
I'm are you anticipating that they will spend more foreign exchange reserves, or do you think they're going to raise interest rates? What sort of macro policy do you think macro steps do you think they're going to take?
Higher rates.
Yeah.
Yeah, I don't think they'll raise policy rates, but they will let deposit rates go higher.
Yeah, okay.
It was something that happened last week where there was a lot of publicity around the fact that 1-year deposit rates were all going around up above the 8% level. Normally in Vietnam, the 7 to 8% level on 1-year deposit rates that's the kind of level that people start to take money out of the stock market. Normal retail investors more aggressively take money out of the stock market. And in our understanding, this is just what we heard from in the interbank market and whatnot. But it seems that they kind of encourage the banks to dial it down a bit. And you saw several banks go from 8.1% to 7.9, just get under that magic 8% number. So there will be, interest rates are going to go higher. That's unavoidable, unfortunately.
You think that'll be the sort of central
so
policy?
It won't be a policy rate. It will just be, I just mentioned that last week, they kind of, in our understanding, they called the banks and said, hey, can you get this back under 8%? They won't be doing that for much longer. Maybe they'll do that 1 or 2 weeks, and then finally they'll just capitulate and say, okay, just let it go wherever the free market is, because the rates need to be higher in Vietnam.
Do you think they'll let the dong go higher?
It's a very good question. So we've never had sort of official confirmation about this, but it's very evident that they have a strong interest to protect the investors. So they are very focused on not letting the USD VND rate depreciate too rapidly. They claim to be managing against a basket of currencies that are Vietnam's trading partner, whatever. But the evidence suggests that they're kind of more focused on keeping investors comfortable. That if they invest their money here, they're not going to, set up a factory. You're not going to lose with everyone thinking about all the Indonesia time, the currency went down like 50% in a year. So so if they did let the currency depreciate, I think what you would see is like very small, steady increments, not all at once, to try to make it very smooth, to make investors feel comfortable that if they put the money here, they won't, it's not at risk kind of thing.
Practically speaking, do investors, do they like this policy?
Yes.
As opposed to a free floating?
Of course, it's great.
Sure.
How do you feel? You spend $1 billion, like set up some factory or something, and then,
Sure.
like in Indonesia, that's what they were doing, and then boom, you lose half your money, and one, like, oh my God, it's a disaster. No, this is actually where they got this idea from is if you look back to the Asian financial crisis in '97, when you have these huge collapses in Indonesia, Thai baht, etc. China made an enormous effort at that time to keep the peg. It was very difficult for them at that time, but they made a big effort to keep the peg in place, and they suffered. Their own citizens suffered as a result of that. But what the Chinese policymakers clearly had in mind, they've said this openly, was that we want to make sure that investors feel protected if they bring money into China. So that wasn't the only reason that there was an explosion of FDI, in the early 2000s, obviously low wage, et cetera, et cetera. But one of the factors that, that made investors feel comfortable to put money into China was that they knew that the government had their back on the FX rate. And so I think the Vietnamese are kind of more or less copying that strategy. If you look around 2015, when you had that big depreciation in the Chinese currency, it had a big impact on Vietnam, and that's the time that they kind of switched the regime switch here and focused more about trying to protect the investors' interests.
I guess the reason I ask is I always think of it as when things are free floating, you can kind of predict what's going to happen. For example, oil prices go up, you know that there's going to be inflation. You can sort of invest for that. Whereas when you have a currency that's pegged or semi-pegged, crawling peg, whatever we're going to call it, it's a little bit different, right? Because now you're relying on the State Bank of Vietnam to sort of tell you, to make decisions about where the currency is going to go, as opposed to just going, well, I know the market's going to do it, so I'll follow whatever the market does. But that's why I wonder from an investor perspective if they kind of go.
Okay, so it's a really good point that you're making. I mean, when they look at everything in front of them, they have multiple, sometimes conflicting objectives. And what we should keep in mind is that every year there's like 5% of GDP worth of FDI that comes into the country. That's the priority. This is the first priority, to make sure that money keeps coming in every year. But you're right, there's other factors. A lot of times you'll hear people say, which is an intelligent point, that, oh, well, why don't they let the currency depreciate, so that they can improve the export competitiveness? But actually, we don't need to worry about that because the wage is like half compared to China. So, multiple things that they're trying to think about, but the first priority is to make sure that money flows into the country every year. And from an investor's point of view, that's what makes them feel more comfortable.
Okay, cool. Yeah, that's super interesting, man. That's pretty much all of my questions. Did you have anything you wanted to add?
What's your publication is for like people that doing like real business here, or who is your target?
I mean, mainly foreign investors and things, people who want to do business in Vietnam. I don't know if you look at it much, but there's kind of a lot going on there. But yeah, mostly.
Mike's not on LinkedIn, so he doesn't see your daily posts.
I noticed that. That's why I got in contact with you, Joel. It's like, but yeah, broad spectrum.
Yeah. Okay.
Cool.
Well, very good to meet you. It's very interesting. Yeah.
Yeah, you too, guys.
Always happy if anyone's reading our. Oh, by the way, I have an interview on. Do you ever look at the Viet? Well, I guess a little bit your competitor, but do you ever look at the VinaCapital channel on YouTube?
I did. I watched it today, mate. Your interview.
Okay, good. I got to get my views up. Thanks a lot. Please share, like and subscribe and share.
Good stuff.
Okay,
all right, gentlemen.
It was nice to meet
Thank you very much for your time. Take it easy.
Okay,
bye.
Bye.